lost a lot of money in COVID, and then started the businesses again, or restarting them rather. Getting good debt and making money from using other people's money is the way to scale, is the way to make money and have potential passive income, right?
What would you then say the biggest mistake that people make when investing in property is?
If you can get the education, making a decision is easier.
After 5 years, release the equity on all 4 or 5 of the properties that you would have bought with that amount of money.
So one of the safest assets is properties.
What makes a good investment property?
You know, Dubai is a different market. Dubai is my true dream and true vision.
Okay.
2012, I was Googling stuff, right? Google is good, but you're gonna get to a certain level where it's better to get some experience advice.
When your money comes in every month, how do you split it up?
I have a good lifestyle, I have a good house, I have a good nice car, everything's good, but I keep investing my money, I don't save. It's a very risky strategy, you don't have to follow exactly how I do it.
Life is the long game. If you're trying to get short-term, you're increasing the risk massively.
The only way you can grow that money is by investing that money.
Why do you think people don't do that?
I'm taking a lot of risk, and you know, risks have paid off. 9 years in business, 8 years in business, and I have passive income coming in from cash flows.
Do you approach your personal finance the same way as your business approaches their personal finances?
People get very emotional when they're living life and having fun, short-term thinking, comfort.
People think that they can go through life without understanding what it takes to be able to live off your money for the rest of their life.
First thing I would do is not leave money in the bank because it's eroding every single day. Educate yourself. That's the main thing.
Hello and welcome. This is the Financial Freedom Podcast. I'm your host, Max Gerstein, fully qualified UK advisor practicing out here in the UAE. The purpose of the Financial Freedom Podcast is to teach everyone, whether you're super mega rich or whether you are just starting out in life, the tools needed to be able to succeed financially. With me today, I've got a very special guest, Adam Rana. Okay, I've known him for quite a while, actually, about the last 5 years, and he's really gone from strength to strength. It's actually been quite amazing watching him come from almost nothing, starting out his business, to now having a very successful AirBNB and real estate business. So I'll leave him to introduce himself.
Thank you so much, Max, first of all, having me here. It's a pleasure going from friends to coming to a business live and growing together. So thank you so much. Yeah, my introduction, like yourself, from the UK, originally come from a corporate background, you know, studied university background and corporate life, then getting into business. I'll go more into detail, lost a lot of money in COVID, and then started the businesses again, or restarting them rather, which kind of pushed my Dubai journey, financial journey, and the business journey. So in summary, I help scale teams now in real estate sales and scaling the hotel, apartment, boutique hotel, Airbnb businesses across UK and in Dubai as well. So yeah, scaling teams, scaling businesses, going to 10x level from where we are today.
Yeah, and what I thought would be, and the reason why I wanted to bring Adam onto this podcast is because a lot of my listeners and also like a lot of my clients, when they're trying to make that transition to starting their own business, it's a lot of umming and ahhing. It's what, is the risk worth it? And I think Adam is a prime example of one, extreme hard work. Like this guy, he hardly takes a break, right? It's the full on grind, but it's really paid off. And seeing again that business scaling as much as it has at the moment, I remember again him just starting with, I think, one Airbnb to now kind of seeing where it was and kind of having a kind of a global business. And it's important for people to understand from the perspective of, look, you start small, but it escalates, avalanches. And again, it's the same in the investment world, same in the personal finance world. Start small, you just keep going, and then over time you get your returns. So
correct. Yeah.
I think having Adam here will get a good understanding of, okay, you know what, from a real estate perspective and from Airbnb perspective, a rental perspective, where should you look? What are the key growth areas? What are the metrics in which makes a good investment property? And that's his area of expertise. But also, okay, for business owners and and I'll have a lot of clients who are business owners. A lot of the time they don't actually have necessarily the time to look after themselves. So it would be quite interesting to see if Adam is the same from that perspective. But I think a good question to start us off on is, why property, and also where?
Good question. So I'll take you back to my younger days. Why properties? If you look at assets, right? One of the safest assets is property. So the basics was the reason that I ended up in property. I bought my first property, 2-bedroom house in Birmingham in the UK, right? Just after the recession, 2011, just graduated, 2012 rather, sorry, just graduated in 2012, bought my first property just on the back of it is a safe asset, right? And guess where that property is now? It's doubled in price. Tenants have been there for 10 years. The last tenants have been there for 10 years. I've had it for 14 years or 13. And that's a proof, just a small investment, nothing bigger than 100 grand pounds, nothing bigger than that. That just shows taking a little bit of risk, leveraging the banks, right? Leveraging the banks, taking a little bit of risk, safe investment, gave me a good ROI, like an 7.58%, I think it gives me. It's the safety in the asset long term. And it helps you negate inflation as well. So, when you're getting, money, there's so much money in the system now, you're negating the inflation by putting your money into a real estate. So basically, that was my best reason, negate inflation and make it safe. That's as a beginner, right? I've got advanced strategies now, looking at buying buildings. We do hotel apartments, boutique hotels. Dubai, of course, Dubai is my biggest sales real estate business now, and I have a portfolio here. But people have to remember that you have to get that if you're risk averse, this probably is the best vehicle to get into investments.
Yeah, for sure, and also depending where. Now, one very, very important thing you highlighted there is leveraging the banks.
Yeah,
I have a nightmare with people, with clients, with the old mentality of try and buy cash, right? Don't use mortgages. Mortgages are evil. Now, in the investment world, debt, in terms of this, is what you want, right? It's what we want. The leveraging is the best way of expanding your own money, but also your own portfolio. So the question then to you is, why is mortgage, or why is debt in this case actually a good thing?
So getting a mortgage, you're using this, so depending on the interest rates is very important, right? So when I started, the interest rates were 3%, 2%, I'm making 8% or 9% ROI. So the deficit between that is the profit, right? So it's very important to understand that you can have good debt and bad debt, right? So good debt is an example I just gave. So getting good debt and making money from using other people's money is the way to scale, is the way to make money and have potential passive income, right? So for me, if you can work out a difference between good debt and a bad debt, for sure, scale your businesses through good debt. Take calculated risk, and it's important to understand if you can make more money, that's what I'm trying to explain, if you can make more money than the interest rate, that's where the win is, right? That's how I've grown my portfolio. Then you can go to the next step, raising private finance, right? Private funding, so we do a lot of JVs, a lot of private finance, and our net deficit is always in profit because we pay out, for example, 7%, 8%, and we're making 18%, so the deficit is 10%. So if you can do the maths, and as a financial advisor, you can advise people, this is your deficit and this is where the profit is. Getting leveraging up to a calculated risk is the way to be.
Yeah, exactly. But then people will then also have the mentality of, okay, but then I can get over the pure income. I don't have to pay off the mortgage. And it's getting people to understand that, no, if I'm putting 40,000 down and getting 160,000 from the bank, I can then actually deploy the 160,000 that I would have spent to buy that property and buy a couple others. Yeah. And then what you then get, as long as you invest in the right place, you get capital appreciation, which means your equity goes up over time. After 5 years, release the equity on all 4 or 5 of the properties that you would have bought with that amount of money. And then you've now doubled your real estate portfolio. Yeah. But you've put down a lot less money and getting a lot more capital appreciation. So the important part, and why a lot of people like property, is literally that. It's the ability to, with pretty much just one asset, start adding and adding and adding without putting any more money down, right?
Yeah, correct. I want to add to that basically because I use an example normally. Like you can buy a £1 million property and put down £250,000, right? That's one property and you live in it. That's not going to give you income. Your leverage of that 250 against, let's talk north of London, 4 properties. The leverage on that, you can get ROI of 8% plus above. That £250,000 can go a long way with 4 properties, giving you rental income on 3 to 4 properties, rather than just using that 250 and just putting in a home, which is not an asset. People forget, they buy a home and think they can leverage that, but that's a home, that's not giving you rental income. So that's what I did. This is how I built my portfolio. North of London, £250,000 go a long way, right? So that's one way of deploying a leverage and getting passive income. You can use that to pay for your rent for a penthouse or a villa.
I love how passionate you got about that.
Yeah.
I'm the same when I have that conversation, because people say, oh, you know what? I'm going to stop renting. I don't like putting my money down the drain and renting. I'm going to go buy a place to live in. And I'm like, okay, I can understand it's an emotional decision, but it's not, in terms of my life, or sorry, in terms of my role, it's not a rational decision. And it's not a rational decision because you're putting money down when actually that money could be working for you in numerous ways.
Yeah.
Rather than, it's actually better to rent. Would you agree on that?
Correct, yeah. But you got to buy assets. So for example, in Dubai, when I'm working with one of my clients we got a launch coming with Emar, and a villa on an off-plan address, branded villas coming up in Oasis, Emar Oasis. That is an asset because you're going to be getting capital appreciation. So you're putting down a certain amount of cash, 20%, then 10%, 10%. That is an investment. So you got to be careful of where, am I just buying this to, depending on location, like you said. So locations are important, history of assets, what's next door, what's in Jumeirah Gulf States, what's in Dubai Hills, similar square foot. So if you got it, there are caveats, right? So you got to understand, like, assets can be bought in that way, and you can live in it, but it's got capital appreciation on it. But if you're going to buy something for $1 million, £1 million, and you're putting 250, and say I'm going to live in it and it's gonna make me money, that's not making money. It's not an asset. It's a liability.
Yeah.
Right. You're paying. You're better off investing that 250. I'm using small numbers here. Some people can use $1 million and split that between 7 properties, and that passive income can pay for a massive mansion. So you're 100% right. People gotta change the mindset from the traditional mentality. Even with high interest rates, you can leverage up a lot. You can leverage up a lot with calculated risk in the right locations.
100%. And that's why it's important to actually have someone to explain this, right? Rather than, and a lot of people are trying to turn to DIY investing to try and not pay the fees. Whereas if I have someone, and this is, well, again, I'm probably saying this because I'm that person, but I would rather pay someone to get it done right and to potentially invest in the right places and get everything from the basics right, as you said there. Now, what would you then say the biggest mistake that people make when investing in property is?
So the biggest mistake people make is not getting educated, right? So get educated through financial advisors and through real estate brokers, good real estate brokers, right? If you can get the education, making a decision is easier. It's not just, for example, I can talk from a brokerage business. It's not just showing a property around. I'm educating. What is AED square footage on here? What is next door community? How much is sold for? Why is it sold for this much? What is the profile of the consumer? Understanding all of these things. Quality, location is number one, of course. If as a buyer you can understand that, and then tie in with your financial advice of how much money you have in the pot and what can you do and how much you can leverage and how much you can use to get where you want to get to as your end goal. Understanding your vision, where you want to get to in 5 years or 10 years, and education. So I think that's the biggest mistake people make, because if they don't get educated, they think, okay, cool, there's a new launch, or there's a new property in Manchester, there's a new property in Dubai, we'll just buy it. And then they say, why didn't it go up in capital? Because you didn't get educated on the data and you didn't have the right people around you.
Yeah, they didn't understand what makes a good investment, why it is a good investment, and then translating that to the other thing.
Not every property makes money.
Exactly.
Yeah, right. And I've gone through that journey myself. 2012, I was Googling stuff, right? Google is good, but you're going to get to a certain level where it's better to get some experienced advice, especially people who invest, like me and you, right? We're investors, right? And we work in the field. And I think that's the best combination. Work with people who invest, who've been through the mistakes, and they're in this professional field like yourself.
Exactly. And I want to highlight that, is that no one ever starts as getting everything right. I use this quote, well, it's not even a quote, I just use this experience all the time. When you sign up to an investment platform, right, it says in big red letters, 85% of people who use this platform lose money, right? And then people just think they can go into investing, buy some random stuff that they saw on Reddit and think it's going to work. No. A lot of the time it might work, but then you don't understand the behavioral management side of it of, okay, look, if the market falls, oh my God, I need to pull out my money. No, you put more money in and you stay the course, right? And again, that's where expertise comes in and education comes in. For you, what makes a good investment property?
For me, what makes a good investment property? So I look for long-term capital gains. So I'm very much interested in where So let's talk Dubai. This is where I invest. This is where my clients invest. For me, a location which has great amenities in terms of the property, the community. Amenities make a good investment for me. Brand. So, for example, I talked about Address Resorts Villas. That's a great brand to invest in. If you look at the historic data, appreciation with 50%, even 100% in most cases. I've recently invested in Nikki Beach Residences in the Al Marjan Island, which is where the casino's coming. So again, what's happening around your property is going to dictate where your property is going or where your investment is going. So I look at a lot of things that are happening around the area, community, and then especially the developer.
Yeah. I mean, you did talk about long-term appreciation there, but obviously, if you look at Dubai's long-term appreciation, it's non-existent if you look from a 10 and 20-year perspective.
Yeah.
Obviously, you're looking more into where you see Dubai going. Are you not worried about the oversupply that will be generated in the next few years? But also, two, are you also then worried about some of the special deals that are now going around all the developers? Because if you look at the UK as an example, obviously there's a chronic undersupply there, which is why you're in Birmingham, for example. None of the developers are offering like these really special deals. And I saw one which was like a free Rolex over here in Dubai, right? They don't offer that unless there is some trouble there. So what is your view on that? I guess it's a two-part question.
Yeah, so view on the oversupply. So you got to look at the government's vision, country's vision, infrastructure, how the government of the UAE is developing Dubai to the next stage, right? So number one, population growth. How are they increasing the population growth? So oversupply is only going to happen when there's no population growth. Already, I think last month we had like 50,000 migrate here. So I think the goal is to get to 6 million by 2033. So if you look at the growth plan and the infrastructure they're putting behind, so Elon Musk just announced the partnership with Dubai for the loop with the Teslas.
Yeah, interesting that.
Yeah, so these little things add up, attracts businesses like myself, right? I moved here because, tax efficiencies, of course. Secondly, better life for family, better life overall. So and better infrastructure compared to where I lived in England. So these things, if they continue to grow, there is no doubt that there won't be an oversupply because people are attracted to places like this, especially wealthy people, right? Especially people even with good salaries. If you got good salaries, it's a great place to be. So I'm no doubt. I don't think there'll be an oversupply. Maybe in some areas where with apartments, but villas, they're still under supply compared to the amount of people are demanding for villas. So as I mentioned about villas earlier, if you're investing in townhomes and villas, there's a massive undersupply because there's a lot of families moving here permanently. Schools are full. If you go to a good school, it's hard to get good schools here right now, right? So schools are very important, having a good community, and there's definitely an undersupply for villas and townhouses right now and going into the next 3 years. But you got to look at what area you're buying in to make sure you're not stuck in a place where there's hundreds of apartments empty.
Yeah. Also, for any watchers and listeners, if you understood actually what Adam is saying here, and again, he's not getting lost in the Dubai dream. He's saying that, look, there's going to be areas in which aren't, but he only looks at on a pure investment purpose. There's no emotion in there. He's already mentioned things like schools, infrastructure, the vision, which areas are going to be built up, what the connectivity is, what the infrastructure is. These are all the metrics of what makes a very good investment in general, right? Not even good investment property. When you're looking at it from a market perspective, you look at all the underlyings. You don't just go, oh, okay, I like this company, right? You've got to look at the PE ratios. You've got to look at what their funding is like. You've got to look at everything, right? You've got to look at their patents, the vision. Okay, and it's the same with real estate. And I think a lot of people in Dubai, and you'll know more about this with me, a lot of the real estate agents out here, they don't look at these metrics. They go, oh, okay, look, I got this really fancy new Danube launch, and it's going to be absolutely amazing. You need to buy. They're chasing a paycheck at the end of the day. And I think the difference with Adam and the reason why he's built his business is because he kind of goes, no, this is why it's good, and he's not following the crowd.
Correct, yeah. For me, it's like, for me and my team, we always train our team. It's not about the commission, it's about this long-term story with my client, Max, right? So Max, we're going to have a story for the next 5 years to 7 years or 10 years beyond, right? That's how we work in sales. That's how we work in real estate, and that's how we work in business, right? And that's why I'm here. Go back on my Instagram, see 10 years ago, right? I've got pictures there, 7 years ago, first business type, property pictures, it's all there, right? I've documented as much as I could. However, people got to understand, like when you're buying an asset, a property, like communities is another thing. So I live in the community where I'm an expert. You know, it's the after service, how good it is, how good is the maintenance, how good is the service when you call them up, how good is the community, the security, how do they take care of the roads, do they take care of the landscape? You know, these things long-term drive prices up because people are attracted to people come here for a better life. We don't come here for a life where landscape's not looked after or things are leaking in the buildings, right? That's a big thing, leaks. There are buildings and there are companies I'm not going to name, but in Marina, you bought them at 2013, they're still at the same price. They're still exactly at the same price that you bought them with other big developers, right? Because there's leaks, there's problems, it's got bad reputation. So as soon as you walk in, people are like, don't live in here, don't walk in here. Great view, but you don't want to live in there. So and the same thing going to happen in the next 3 years. There's a lot of handovers happening in 2026, 2027 of apartments. A lot, way more than villas. If you haven't looked at the community that you're investing in and you're going with these 1% payment plans, there's a reason they're 1% payment plans compared to the 90-10 of MR. There's a reason, right? There's a reason. Community, amenities, after service. Are you going to get problems after you bought the property? Service charges. All of these things you got to look at before you invest. And that's why I live in a community that I sell or I work with my clients. I live in the Kiel community, District 1. I believe is one of the best, with the growth in the 4 years' time. Again, looking at growth, it's quite empty at the moment, but look at 4 years, closer downtown and what's coming in the area.
Yeah. And then would you then still, because we compare a lot when we're looking for our clients, we work on a risk basis, right? And for us, we got to look at, okay, what for our clients is going to be nice and steady. Like I always say to my clients, I'm not looking to give you the most amount of growth. What I'm looking to give you is something stable. The stability of, I know that it can continue to perform for you. It may not necessarily be the best in the short term, but in the long term, we can't doubt its growth. And we see that a lot in specific areas in the UK, Birmingham and Manchester for one. Leeds is coming up now as well, right? So what are then your views on that as someone who actually has part of his business in the UK and in Birmingham? Do you still see some growth metrics there? Do you still see the UK and specifically, let's say Birmingham and Manchester, do you still see the metrics there for good growth there to be good investing?
Yeah, so I still believe UK in parts has a good metrics for growth, right? Taxes apart, there are opportunities. Tax is a problem, taxes are going up, interest rates are going up. But when there's bad things happening, there's opportunities. That's how I've grown a business. Post-COVID was my biggest, that's where I made my money, right? Post-COVID is where I made my money. But in COVID, I was like, I'm going nowhere in life, right? So same in the UK, we're still expanding our businesses in Birmingham, Manchester, as I said, Leeds, these 3 locations, Liverpool as well for us. These 4 locations has got potential of real growth, in my opinion. Compared to Dubai, Dubai is a different market, totally different market to UK. Business-wise, Dubai is a very great place. So yeah, I 100% see asset increase, prices will increase in the next couple, with HS2 coming in through Birmingham, Manchester, I believe as well. I'm focused on Birmingham, so you're probably better on Manchester. But HS2, there's a lot of other improvements are happening. So I believe in the UK still. But Dubai is my true dream and true vision.
Okay, very interesting. And I just want to go back to how you built it up, right? So you were in a corporate job before. I believe you worked for Jaguar Land Rover.
Correct, yeah.
You left that to then start an Airbnb business.
Yeah.
How and why did you make that step?
So 2 reasons. I'd want to dream big. I want to achieve maximum output from my life. I have a purpose. I want to give back, have an impact. The way I have an impact is growing teams, which is my dream in different industries. Hospitality and real estate was one, right? Building teams, building assets, and building cash flow, right? 3 things. When I was in Jaguar Land Rover, I was in a corporate business, like probably most like your clients, earning a very good salary with very great benefits. The first thing that I did was invest in assets to build up a little bit of a baseline, right? As I said, my first property in 2012, second 2014, third 2017. Small, sounds like a long term, but that gave me a steady flow of money. And then that set me up to go into business with some form of basic return on an investment. And the next goal was to get cash flow. So the reason I went into business is I have unlimited growth of cash flow, how hard I work. And I have a dream of having an impact on having employees, scaling teams, and building something that I'm proud of. So that was the main reason. I was a consultant in Jaguar Land Rover for engineering, took all my skills of processing systems, financial knowledge, and put it into a business, started my first Airbnb business in 2018 in England.
And then how did you scale up that Airbnb?
I scaled up because I have a lot of energy, and I just knocked on loads of doors, and I did a lot of cold calls, and I spoke to a lot of people, right? And it takes time, but I went from 1 property to 3 properties. So what we did was I have my assets that I own. There's another strategy, which is sublease in Airbnb. So what I did was sublease as a property management company. So it's a property management business. You're an owner. I'm one of our friends that we know. We property manage for him, right, in Birmingham. He bought a property off plan. Straight away, we come in and we give him guaranteed rent. Done. So he's got 2.5 years, I think he's had the property, paid rent on time. We scaled that by reaching out to loads of landlords in the UK, paid them, the market rent, if not sometimes above market, looked after the property better than a tenant would do, because we clean our properties every week, right? Professional cleaning. We make sure they look exactly the same as pictures were taken the same day, because we cannot put our corporate clients to stay in our buildings or in our apartments if they don't look exactly the same as the pictures that are on the advertisement. So I scaled to reaching out to a lot of landlords, property managing theirs, mostly on guaranteed rent, some of them on revenue share, and one landlord has other landlord friends. One owner has other owner friends. So 1 to second, someone has a portfolio of 5 properties. We started getting 5 properties in. Within a year, we had 10. Then within a year and a half, we had 22 just before COVID. What that required was processing systems, where I take my Jaguar Land Rover corporate knowledge, installed it into my business, and the rest is history.
Yeah. So you became successful not because you started with loads of money and just entered into the market.
No.
It was literally like, we have 1 property, let's see what we can do with it. And then it scaled, and then it developed over time. And it's the same with personal finances, right? Everyone starts off with an income, and everyone starts off with expenditure. It's what you do with the surplus which then enables you to scale, right? If Adam sat there on his 3 properties and subleased 2 and just let that go over time, right? He would have been able to have a nice income, and he would have been able to probably sustain that for the rest of his life, and he would have been quite happy. Yeah. But it's what he did with the surplus and then tried to make it work more for him so he can have more ongoing, which enabled him to develop. It's the same as what I do, or what financial advisors do, is we take the surplus and we go, right, how can we develop this surplus to create more surplus for you, and more surplus and more surplus, and then diversify, create passive incomes. And then that's, again, the importance of speaking to experts on this, is that we know through trial and error how to do it. If I was to start, I've got a couple properties, but if I was to start that, if I was to start subletting through Airbnb, I'd go straight to Adam. I wouldn't try to do it myself. He's built a very successful business of it. He's the expert on it. I could try and muddle around for a little bit, and I might have some success, but honestly,
losing a lot of money, yeah.
I will pay Adam to do that, because he has gone through that trial and error. And it's the same as, again, when I have CFOs or I have investment bankers and they come, I manage their investments, because 1, they don't have the time, but also 2, they don't deal in the personal finances and working out, how do I make every last penny work for me? And then what is that eventual goal?
100%. I want to add to that. So I hardly keep any money in the bank, right? Because inflation is really like taking the money that's in the bank from your pot. People don't understand that £10 or the £100 or the $100 is not worth the same the next year or the year after. The only way you can grow that money is by investing that money with people who are financial advisors, working with good real estate brokers, or education. There's a lot of free education online. So go on, learn from. I post free education. Learn from that, and then get an expert. Leaving money in the bank, I don't leave money in the bank. It's either I'm like the broke asset, but like I've got assets, but I'm broke, right? Like I publicly say this because I work on cash flow. I have a good lifestyle, I have a good house, I have a good nice car, everything's good, but I keep investing my money, I don't save. It's a very risky strategy. You don't have to follow exactly how I do it, but you can save a little bit, but 80% should go into investing in the right places, right asset with the right people.
So what I'm going to say here is, and I'll go into the way in which I instruct clients, but you make a very good point, and it's basically what I do for my clients. I have them save a very minimal amount in the bank, if any, and I keep them very strict. They're not allowed to have any more than this particular number. So when your money comes in every month, how do you split it up?
If I'm honest, I'm a very high risk taker. So 80% to 85% will, I'm not saving at all. Like, because I have experts around me. If I'm not the expert in this position, I'm investing. Either I'm partnering with someone in a real estate deal, either I'm buying the whole asset myself, or stocks, shares. I'm taking a lot of risk, and risks are paid off. 9 years in business, 8 years in business, and I have passive income coming in from cash flows. So I would say I'm putting a lot of my money back into the business or back into real estate. Whether it's the UK or Dubai, mainly in Dubai for me right now. As I said, I just purchased an off plan with Nikki Beach Residences. I truly believe in it, and I said, look, hey, got a bit of free income or monthly income that comes in. Hey, let's put a deposit down for this. So a lot of my money. But I would recommend for an average person, first of all, that sounds funny, but don't try to be an average, because that's where you're going to lose. Inflation is going to kill your money. Take your money out, most of the pot, put it into investments with the right people and the right assets.
Do you try and keep a good level of liquidity, though, with those investments? So you're not overstimulating yourself into real estate, for example? Because it sounds like, again, you mentioned stocks and shares, but it sounds like the majority of your money is
in real estate.
Going into real estate.
Yeah.
So then let's say, for example, and again, it obviously with what you've got at the moment, you've got quite a diverse portfolio. You've got quite a lot under you as well.
Yeah.
So because of that diversification, you are limiting the risk in terms of, okay, look, if one or two properties don't give me an income, then it's fine. I've got a couple others.
Mm-hmm.
But again, what we see sometimes, and look, take 2008 as an example, the prime mortgage crisis, where again, properties collapsed because of the overstimulation on the debt with banks lending out money. So if you got into that situation, if a lot of your properties weren't giving you an income, if obviously your business was impacted and then some of the developments didn't happen the way it was, have you got then something there to go, right, I've got money to fall back on, I don't need to rely on all of these?
Yeah, so my story is a little bit different because I have multiple businesses, so I have cash flow. So I have money coming in, that's why I'm able to invest a lot. What I would say, would take a step back, I don't over leverage. So our mortgages in the UK are 60-40. 60% leverage, so that's a decent amount of leverage, or even go 50-50. So when there is a correction, there is a crash, you're not going to lose. You still got enough pot in. That's your saving. That's your pot in the house. So we don't over leverage. So we don't get 80% mortgages or 90% mortgages. That's where you're going to lose, because you don't have much in the bank or in the bricks of your investment. So don't over leverage. I would always say that, and you always be safe, because 2008. Correct me if I'm wrong. The house prices went down, maximum 22%?
Yeah, around almost 20%, I think.
20%? Yeah. So as long as you're not leveraged crazily, you can survive that. Real estate is a long-term game, right? You're not going to become rich overnight. I didn't become rich overnight. Real estate is a long-term game. Don't over leverage. As I said, I do 60-40, and I feel that's safe enough to play a long-term game, and make sure you have you have cash flow coming in your life.
Yeah, and again, Adam keeps mentioning this, but keeps mentioning long term, right? Long term is the important phrase here. Mm-hmm. We're not trying to sell something short term. We're trying to sell something medium term. Life is the long game. Mm-hmm. If you're trying to get short term, you're increasing the risk massively, right? We would never, when I invest with clients, we never invest clients for the short term. It's always for the long term. Mm-hmm. Now, kind of going back into way I advise in terms of splitting clients' income, right? Their income comes in. You've then got your necessities, right? You've got your fixed costs. That is your housing, your car, your food, your phone bill, everything like that, okay? What you need to work out, your fixed costs. You then need to work out your variable costs, which is potentially going out and having a good time on the weekend, right? And then you then need to work out, right, where do I have the leeway, okay? When you understand your surplus, that gives you then the power to then do what me and Adam are talking about. It gives you the power to then invest. Adam has a very good understanding of his cash flow. He knows, I imagine, exactly what's coming in, exactly how much he needs to pay, which then gives him then the knowledge of, okay, I've got then this to work with for my investments. I do the same with my clients. I do not allow my clients to have more than the necessary amount in the bank. Generally, this is 3 to 6 months worth of salary. Anything over and above that needs to be invested, needs to be working for you. So what you can then look at when you're looking at managing your own personal finances is, okay, perfect. I'm going to keep 30,000 dirhams in my bank account. After each month, I will go back up to 30,000 dirhams from what I spent. If that then goes up to 38,000 dirhams, I will take that 8,000 dirhams and I'm going to straight away move it into an investment. I will not let any of my clients, as try as I must, have more than that specific figure, because what you end up doing is you end up maximizing your actual savings because it's also invested, but you're not going to spend it immediately. Right. When we let our bank accounts go to too much, we go, right, that watch looks good, I'm going to get that.
Yeah.
You know, that holiday in the Maldives for 3 weeks looks really nice as well. Maybe we upgrade, right? My job is not to be the fun police. My job is to go, right, if you do this for me, you can have the life that you want. It's short-termism versus long-termism. If I say, look, 3 holidays a year, but that means that when you're 50, you can have as many holidays as you want, I'll sacrifice that, right? And that's what people should be doing. And people go, I want a big amount of money in the bank. Wrong. Oh, I don't want to invest that much because I'm just a bit worried about it. Again, you need to then understand that that means you're making a long sacrifice in the long term.
Sometimes it's not even that long, right? Like I did it really basic. I was like, hey, let me target 3 properties. These are my early days, right? 3 properties. Give me, £1,500. What's that? 4,000 dirhams a month times 3. Like I've got 12,000. Right. So I've invested in a capital appreciating asset. Obviously, caveat that we've got the right education, right financial advice. Then I'm like, hey, this is my free-flowing extra money, which now I can put in a pot for my kids, or I can put it the pot to buy a Rolex or go to Maldives. You see where I'm going with this? So it's not even that long. If you get a return on investment, which is good with the appreciating appreciating asset, that is your fun money. And that's what I did, right? And I was like, hey, I've got a financial advisor. He's helped me. I've got fun money to play with. I can save it, or I can reinvest it. Right, depends how much fun you want to have, how boring do you want to be. So depending on personal goals, when I work with clients, I'm like, hey, what is your end goal? What do you want? Do you want to just make 20,000 dirhams extra a month and have fun and blow it in Maldives, as you said, or go to Miami, go to America? Or do you want to reinvest it so you can go and reinvest? So you can still have fun, in my opinion.
Is goal setting important for you? And when you
as an investor, yes. I invest medium term to long term, or even short term, depending on what things. But medium term to long term, I do. So 3 years, 4 years, and then 10 to 10 years, right? So as I said, we're looking at buying buildings. That's my long term goal. Lease option agreements in the UK. I'm like, hey, we're going to do this, and then we're potentially going to have a lease option agreement. Well, we are going to have a lease option agreement. Buy this in 5 years. It's a huge asset. You're talking 32 million above in Birmingham. Buildings. That's my long term. Short term. Off-plan investments here, they will appreciate when I exit, right? If I'm buying the right places, which I am. So yeah, short term, I have a goal setting, and I have goal settings of long term.
And then, do you approach your personal finance the same way as your business approaches there for personal finances?
I do, yes, because I run my life as with key performance indicators, so KPIs. We have a KPI review in business. Why not have a KPI review in your own life? Run your life as a business for financial part of your life, So yeah, I do.
So you probably didn't pick it up there, but I started smiling basically when Adam said that, because we see so many times people focusing so much on the business that they don't then run their lives like that. You've got to run your life like a business. You've got to have KPIs. You've got to have very, very, do you think the business would last if they're maxing out their credit cards every single month, struggling to pay it back, getting all this debt, but then still going out and having a really good time on the brunches on the weekend? Yeah. No, the business cuts out the negatives. They keep their cash flow positive so that the business can continue to expand and do well, right? Why do you think people don't do that?
Because of emotions. People get very emotional when they're living life and having fun. Short-term thinking, comfort, right? Short-term thinking, I had to sacrifice my short-term thinking of comfort to discomfort, which means investing, which means, building a business, reinvesting. So investing in a personal life, it's like reinvesting in a business. So when I get free cash flow, after I've done all my numbers, that gets reinvested in the business. That gets reinvested in business for many purposes, tax purposes, many other reasons. And if your life is like, if you're not running your life as a business and not reinvesting the money of the free cash flow you're getting, and you're just wasting it by, going out, holidays every single, every other month, it's not the best way to live for long-term growth. You're having short-term comfort. For what? Because if you want the life and the passive income, assets, and you want to have a good, when you're 50 years old, like you said, you want to have assets, you want to have a pension pot, this is the way to do it. Invest discomfort, have discomfort today, put your free cash flow treat yourself as a business and measure yourself. Like, there's apps, where's your money going? Measure yourself on an app, download an app, say, hey, I've invested this much, this is where my money is and where my money is going on. If you're entertaining yourself a lot, 30% or 40% of it's going on entertainment, that's no way to live.
Yeah, exactly. It's all about structuring. And this then goes to the beginning phrase of know what your income is, know what your expenditure is, get your surplus, and then maximize it. And that is really the cheat code towards having success. And I spoke to a client a couple of days ago, and they felt like they were in a situation where they'd never be able to have money. What do you think the average pension pot in the UK is? So 65-year-old, just about to retire. What do you think the average pot is?
Less than £1 million?
Way less. It's £200,000.
Wow. That's crazy. I would have thought it'd be 900k.
£200,000. That is the average savings of a 65-year-old in the UK.
Wow.
You can replicate that from when you're 20 and you invest £60 a month.
Yeah.
And you'll have 215 grand at about a 7% growth rate, right? Which is, just invest in the MSI world, for example, right? Okay. That's mental. That we're not taught from when we're in school. Okay, hey, look, people aren't saving the money. People are spending their money. And for the price of, 10 beers, right, a month, you can actually double the amount of money that you'll have in retirement.
Yeah.
Right? It's crazy.
So which asset classes would you say that money gets invested in? What would you recommend?
To be honest, equities is where you want to be. So then this is where you need to understand the different types of asset classes. You have equities, you have bonds, you've got real estate, you got crypto, which I don't like and I'm not going to get into, but because it's not safe, right? Then you have cash, gold is another one, like commodities. So what you need to understand is your time frame. So that's your time horizon. How long are you going to be in the game for, right? And you got to understand your risk tolerance, which is how much do you have to lose? So if you're going to invest all your money, it's probably not the best idea to invest all of that into quite a risky investment, because if that goes tits up, you're done. Right? So there's a lot of different things here. However, for someone young, for someone trying to build wealth and what we call a wealth accumulate, you want to be in what we call equities. Equities are essentially shares, right? They're parts of companies. When you buy a share, you own part of that company. That money will then go up once the company appreciates. Now, to diversify yourself, so you're not putting all your money into one company, you can buy something called funds or mutual funds. They invest in a basket of companies. So it's always best to be diverse, unless you can sit every day and manage your own stock portfolio. Buying funds is generally the way to go forward, because you have someone a lot of the time managing that actively. It's their job. They will buy a basket, they'll diversify the risk, and you can just leave it in there and that will grow over time. If you do that, as I mentioned, over 40 years, you can make that $60 turn into 215 grand. When I speak with clients and we go through an exercise, right, Adam, and it's, okay, when you want to eventually stop working, and I don't believe you'll ever stop working, to be honest with you, but if you ever wanted to stop working, what income would you want? That you say, you know what, I've worked hard all my life, every month, Max, if you were to write a check to me.
For me personally?
Yeah, how much would you want that check to be?
I've seen millions of dollars.
Yeah.
I'm not joking there, no, because I just don't want to be average, and this is a transparent conversation. Yeah. I want to maximize my risk. If I was to say, hey, I don't want to work, which is never going to happen because I grow from discomfort, I grow from growing more, and I get more happier. I would say to comfortably live. Comfortably live is
on a monthly basis. Let's say I was giving you a check every month.
I don't know, probably a couple of $1 million
a month.
Yeah,
there we go.
But not to live. That's what I would want. Yeah. To live, you can easily live on like 30,000 a month in Dubai easily.
Yeah,
like have a good life.
Dirhams.
Yeah, sorry.
But again, look, we don't want it to just live. So when I ask this question to a client, a lot of the time they go to me, £2,000-3,000.
No,
and I went, but you're not going to have a good life for that. Have you worked for the last 40 years to give yourself £2,000 to £3,000? And they went, oh no, but I think it'll be quite comfortable. I'm like, but if we're setting goals, if we're having goals and aspirations, you want to shoot for the stars so that, look, if it messes up, you land on the moon, right? So when I do this with clients, they go, okay, you know what, realistically, let's say £10,000 pounds a month, right? I'll live on. And then, they take it very seriously, but then they don't understand what it needs. And I think general people don't understand what it needs to go there. You have a very clear understanding of, right, these are my goals. This is how I'm going to scale my business. And this is how I'm going to maximize my money over the long term to give the life that I want. People think that they can go through life without understanding what it takes to be able to live off your money for the rest of their life. Because if they're hardly saving now, their habit is not going to change over time. If you don't understand right now how to give yourself $10,000 a month when you retire or when you want to turn off a passive income, how will you ever get there?
Correct. Yeah.
You won't get there, right? So again, it's going, right, if I want an income of $3,000 a month, right, realistically, you need at least $1 million to actually be able to give that in perpetuity because you don't want your money to run out. And that's just $3,000 a month, right? Yeah. Which is crazy. So again, it's getting people to also understand, right, okay, and this is tax-free, by the way. We're not even mentioning if you go to a taxable place. So it's getting people to understand what it takes to achieve those goals, which is also actually part of my job, is going, okay, my job is to actually help you understand your finances, help you understand the tax elements of everything by bringing in, tax advisors, but also having good understanding. But it's also about going, right, how do you reach the end goal and what does that take? If you want to have millions of dollars each month, right, paid to you, do you know what it takes to get that? How many properties do you need to give you the passive income? How much do you need to have invested to be able to give you that? At the moment, you probably don't, right?
Yes. So you're on the right page, right? So I have planned all my life. It's saying X number of properties. The goal keeps going up. That's just the way my mind works, right?
100%.
But I started with, as I said, I wanted 3 properties. I wanted 4 Airbnbs, 3 assets, 3 non-Airbnb properties. I wanted 3 non-Airbnb properties, and then I wanted just 4 Airbnbs, and I was happy with that. And I realized, oh, that's not enough. I want more because my life standards have gone up. So my goal was $10,000 at the start, £10,000 rather. And if I get that, I'll be happy. But then goals increase because you see the return of what you just explained. You realize goal setting is easily achievable if you work hard, if you have the right people around you. If you set a goal of buying 4 properties or buying equity, like you said, if you get that right, you probably get addicted to it and be like, hey, how are we going to do this again? It's exactly what's happening.
If you didn't have that goal in the first place,
you don't know where you're going. It's no direction.
You would have got into the 3 properties and probably stopped. Yeah, like, this is enough. Yeah. I'm actually quite happy with that. But because you set a goal and you actually achieved it so quickly and you're on the right track, and you then looked at, well, I achieved that goal, but then I've got all this money here that I haven't been using. Why don't you use it? And I find that a lot with clients as well, is that when I set them that goal and I go, look, here, this is the goal and this is what you can take to achieve it. When they start doing it and they realize actually they're working their way towards it, then they go, I've actually got this extra bit here that I actually didn't want to give you at the beginning, but now I can see it working. Let's deploy that. And then now they're 2-3x what they were before, just simply because of the goal setting. So, I get asked this question a lot, what is the most important thing when it comes to finance and building wealth? And it is actually the goal. It's not what we do. That's the easy part. It's the goal and understanding what it takes to kind of get there. So then going back and asking you then kind of a question, I think you mentioned to me actually before the meeting that you were looking at hiring a CFO. Right? You come across to me, as someone who is very, very switched on, knows how to run the business. So why are you hiring a CFO?
I think, again, financials is the driver of the business. I don't think I'm the best to run. So we're taking our business to £10 million turnover. That's our goal for this year in the UK, and the businesses here are separate, but the UK business. And we want to get a financial director in the business to make sure we're going the right direction. We're making sure where we can improve financially, because there's a lot of waste potentially in businesses like mine. So I think I've learned this in the last 3 years, because we have lost money as well. Like it's not always happy days, I've lost a lot of money, and the main reason is we haven't kept tabs on the finances properly. Right? I'm decent now, but I want to get better. And financial directors, financial advisors, you've got to have them in your business or in your life. As you said, your life is your business. Right. I have a business, but my life is my business as well. So, learning from them is a key thing for me.
Yeah. And then do you apply that to yourself though? So do you have someone who's going, right, Adam, this is your money coming in, this is the way you should be deploying it or helping you with that. So do you have a CFO that then helps you, or is that something you still manage?
At the moment, I still manage that because, again, I have a lot of financial literacy just because what I've done and what I've studied. But I think it makes sense to have someone potentially as I grow my my income and my wealth, to have someone guide us, because I don't have that much. I only have 24 hours a day. So yeah, having a CFO within your life or a financial advisor is very important.
And then because you are essentially cross-border, multi-jurisdictional, obviously you've got your UK business and your Dubai business, have you taught yourself the intricacies of, and again, a lot of people in the same situation, they work for maybe British companies out here, they have to spend some time working in the UK as well. Do you actually understand how that affects your then tax position?
Rate, yeah. So we've just hired a tax advisor for especially for this. So if anyone's in this position where they spend, because you have your minimum days you're allowed, if you can do the test, how many days you're allowed to be a tax resident of UK or tax resident of Dubai, work with a tax advisor, or I guess you might help with that as well. And that's something I learned only a couple of years ago, and it's very complicated. It's very complicated to do on your own, like to work out. There is a test you can do online to work out how many days with your ties and family ties and your asset ties. But so we have a tax advisor now advising us, how we can structure our businesses here and in the UK.
And again, look, that's really important, because a lot of people, they don't like to go for help. Adam is in the situation where he's like, you know what? There's people who know more than me.
Yeah.
I'm going to go get his knowledge, because then he will elevate me. I'm going to go seek the tax advisor because, you know what? Probably don't have the time to do it yourself.
Correct, yeah.
But also...
don't have the knowledge.
Yeah. And people try to DIY it. And so let me kind of pose this question to you. If someone was trying to DIY the Airbnb market or the investment or, property investment at the moment, where do you think, I know you mentioned day one, but let's say someone just starting out, let's say they had $100,000, where would you say is a good investment? Where would you actually put that money?
So if someone's starting out with just $100,000, Dubai would yield a better appreciation in capital in the right place, the right location, as we talked earlier. You could do a lot with $100,000. For that money, you can get a bigger capital appreciation in Dubai with the right agent, with the right, if you're getting a mortgage broker, financial advisor, with the right advice, you can get something really good. What I want to say here is, right, the listeners listening to this, you want to have a power team. What I mean by power team, when you have a power team, you have a good accountant, a good tax advisor, a financial advisor, and a good real estate agent. These are all educated people. Get the right people. Make sure you do your due diligence. If you have a power team around you, they work on commission basis, for example. If you get a good investment, or some people you might hire. But if you have a good power team around, it's like when you're building a house, you have a power team around you. You have a kitchen fitter, you have a plumber, you have someone doing the building work. Power team is very important in your life. And listeners, listen to it. Go get a power team.
How do you pick a good real estate agent from a bad one?
For me, you want to test their knowledge on areas, understand their education. So it's not necessarily how long they've been in the business of real estate. It's how much knowledge they have. That's what we have as area specialists. They understand what's happening in the next 3 years. And is there a new building coming across this building? Is there a new metro line coming? So ask the educational questions, and that's how you find out if the agent is very good or not. Also, how much they care about your vision and your goals. That's what's important. So explain your vision to them and see if they can help you with the goals and achieving the goals. It's not about just making a sale. We're not a tour guide, so try and avoid working with tour guides. I call tour guides with people who just show properties around. If someone's not asking you the right question, why are you investing? That's the first question I always ask my client. Why are you want to buy this? So it might not be the right product for you. Real estate might not even be the thing for you. You might be better off investing in high risk crypto, right? So I always ask that question. So if your real estate agent is not asking that question, you're not with the right people.
And then now this is for kind of the more business owner aspect, but have you thought about business continuity plan, as in if something happens to you, your partner, you get sick, heart attack, cancer, whatever it might be, have you got a contingency plan in place where it's like, okay, this is what happens if partner drops out, takes sick, something like that?
So, we've learned the hard way. So I'm removing myself as a key man risk within the business. So if you're running a business, small businesses, try as quickly as possible after making sure the business is stable to remove yourself as a key man risk so business can continue regardless of what happens to you. Hence, I live in Dubai and I've got a huge business in England which works on its own. Key man risk is removed. We also try to, this is another thing, working capital. We try to have enough for 2 months, 3 months. So if things go wrong, we have enough leverage or time with working capital in the business to be able to come back and restart if things go wrong. And that's what we do at the moment. Like, if you have any other advice, I don't know.
Yeah, no, that's pretty cool. And I think a lot of businesses don't even kind of factor that in. And I'm actually quite surprised that you have factored that in. But what also quite a lot of businesses do as well is they have something called key man insurance, which is if something happens to you or something happens to your business partner, they get paid out. This can be from a couple 100,000 to millions, right? So, for example, like Visa, let's take Visa as an example. If something happens to their CFO can't work anymore, it would take a lot of money to be able to find someone who'd be able to fill in his shoes. So then they would have a key man insurance for him or her to go, right, there's 2 million. That's going to pay for the business to continue, but also to then find the next person. So again, when you have businesses kind of like yourself, which, look, you've removed yourself kind of from the UK business, but it's still very much reliant on your brand because you are a big part of your business,
Correct, yeah.
right? If something happened to you or your business partner who helps on the real estate side, it's, okay, how much is it going to cost to replace him? And also, look, if I can then get an insurance, which the premium is not too much, which will then pay a lot of the money off anyway, that allows my business to continue, but also pay for the recruitment. So again, things like that is really interesting when it comes to there and actually solves a lot of businesses' issues.
Yeah.
Right? And then also maybe actually, which is quite interesting from like your personnel perspective, right? Do you try and embrace a culture within the company where, like, you know what, real estate, they get big pay packages when, they sell a decent property. Do you then try and instill them kind of the same metrics that you go by, which are like, you know what, use your money, don't spend it on stupid stuff? Do you kind of have that culture within your company?
So we're building that culture. I've created like a club within my company. So both the two main companies, real estate and the hotel apartment AirBNB company, I try to create a culture where it's like a club that we're in together. So you get to be part with me, learn from me, and what I do is you get to follow the footsteps. So I have a mastermind or a mentor younger business owners, where, like, if you're making this money, what am I doing? You're not any different to me. If you're in my company, you got to be thinking like me. That's where you're in the company, as the culture works. So if I'm investing when I'm making X amount of money, I want my team to be doing the same, right? I can't preach something to my investors and my team is not doing that or I'm not doing that. So we have that culture. I tell people, enjoy your life, but you gotta invest most of your money back in.
Perfect. And then to wrap up, what would be then the one major bit of advice that you would say to anyone looking to kind of get onto this wealth creation train?
First thing I would do is not leave money in the bank because it's eroding every single day. So go away, analyze your finances like we explained earlier. So first thing you need to do is look at, yes, I have this free cash flow. And the first thing you need to do is talk to a financial advisor. And for me, it's real estate assets is my biggest asset class. Work with the real estate agent, come and talk to me, come and talk to yourself if you have some free cash flow. Or you're looking to increase your cash flow, because that's another thing you want to be looking at. It's not always you have this. Increase your cash flow through your other multiple streams of income. So I'll advise, talk to a financial advisor, talk to us. Free advice, like I have like my Instagram, YouTube and all this stuff. You can get a lot of free education. Educate yourself. That's the main thing. Exactly.
And I think then to sum up, that's probably the most important thing when it comes to this podcast. What this podcast is about, it's about education, but also feeling like you can reach out. I may not necessarily take you on as a client, but I'm saying going to point you in the right direction to then give you tools to eventually become one, right? Because you've then built that up. So always try and educate yourself, reach out to the experts. Don't be afraid to as well, because we all started somewhere, right? And then what we do like is we like people wanting to then build themselves up. So look, this is the Financial Freedom Podcast. Adam, thank you so much for joining me. It's been an absolute pleasure and quite eye-opening as well, because I've never been that bullish on the Dubai market, but you have changed a little bit in my mind. Yeah. So look, thank you so much for coming. And guys, on to the next one.
Thank you. Cheers, mate. Well done.
Cheers, bro. Thank you very much. Oh.